Hi guys, this is my trading journal for Friday the 19th of March. The equity markets remain unsettled. They are unsettled by the rising prospects of rising interest rates, and there now appears to be a tug of war going on. On the one side, we have those who believe that with the economy predicted to have a massive growth of around 5 to 6% this year, they believe that growth will happen due to a combination of pent-up demand and all the stimulus the government has injected into the economy. They believe inflation would have to rise above the 2% Fed target, and the Fed will have to raise interest rates accordingly. And on the other hand, we have those who believe that yes, the economy will see bumper growth due to the pent-up demand and the stimulus. But once the world opens up and the initial binge we have on the shopping experience we missed out on for over a year, the growth will then go back to pre-pandemic levels. And I say this because they don't believe we can keep on buying stuff at the same rate as we will be immediately after the lockdown. They don't believe we can keep on buying stuff at that rate into perpetuity. So this camp believes that the rates would then have to fall back below 2%. And I say this is mainly because the Fed has borrowed an awful amount of money, about 5 trillion by some accounts, in just 1 year. And they need to service that mountain of debt. And if rates rise above 2%, the repayment would be substantial. This camp believes that Fed is operating in a different environment to the last 30 years and will keep rates below 2%. Now, a lot of people in the first camp would say, well, if I tell you that the economy is growing at 6%, employment is low, where do you think rates should be? Well, one thing they're missing is, one, in the last 30 years, I'm not aware of any pandemic on the level of COVID-19. And two, yeah, the economy will grow at 6%, but in 2023, unless we have another pandemic and everything shuts down, that 6% it won't be achievable. You know, US cannot consistently grow at 6%. It'll be a one-off growth. Which of the two sides is correct? Your guess is as good as mine. But what the tug of war is causing is dislocations in the equity markets. We're seeing wild swings between value stocks and growth stocks on nearly a daily basis. And at the closing bell today, the equity indices were mixed. The Dow and the S&P were down, while the Nasdaq and the Russell were up. The 10-year bond yield was up by 1 basis point to close at 1.73. And by historical standards, although the 1.73% on the 10-year is not particularly high, it's the pace, the rate. In December, the 10-year was at 0.9%, and in March we're at 1.73%. That's nearly 1,000 basis points. It normally takes over a year for rates to move that much. The VIX was down today. It closed at 20.95, and although it was 19.23 on Monday, on Wednesday, on Thursday it was as high as 23, so it came back down. But once again, it's back above 20, and whether or not it stays above 20 or goes back below 20, time will tell. Today is a triple witch Friday, triple witch expiry, and the March contracts expired. Both legs of my MSTR position expired in the money, which means I took the maximum loss on the trade. The full loss on the MSTR position means that my year-to-date P&L has now swung into the red for the first time. and I'm looking forward to a better second quarter, third quarter, and fourth quarter. In terms of trade ideas, I had no new trade ideas. Moving on to my open positions, and I'll look at the MSTR first. So on the MSTR, I sold the 820, 810 put spread for $4. MSTR closed at 777. MSTR closed at 777, up $44, which means I changed my GTC order to buy back the spread at $10, but I did not get filled, and that means both my 820 and the 810 puts closed in the money. Now CME is yet to exercise the options. They usually do that late on Saturday or early Sunday morning, and once the positions are netted off and I know the exact loss amount, I'll post the close trade. So that's the last one in March. My April positions, I've got GNOG and BLUE. GNOG closed at 1689. My my short 17 put is slightly in the money. GNOG sold off over the last couple of weeks with the rest of the market, but unlike some of the other tech stocks, it actually hit rock bottom and bounced off it. It was up today on above average volume, and no action is required at the moment. So this is a chart of GNOG. This is today's price action. It came down and then closed near the high of the day. Volume above average volume. This stock sold off like many other tech stocks, but most other tech stocks sold off to around here. This one actually sold off a lot more. So no action required on this one at the moment. In terms of the P&L on this, currently showing negative $55 per contract. The next one is BLUE. On BLUE, I sold the 30.25 put spread for $1.90. Let's see where BLUE closed. BLUE closed at $31.58. It closed at $31.58, up 129. My short 30 put is currently out of the money. BLUE also sold off over the last couple of weeks with the rest of the market. It hit rock bottom and is currently consolidating above 30. No action required on this one as well. In terms of P&L, currently showing a positive P&L of $10 per contract. And that takes me onto my watch list. On my watch list today, I have got BLUE, BLOK, MSTR, TAN, ARKK, and PBW. And that brings me to the end of the journal. Like I said earlier, once the MSTR position actually settles and I know the final figure, I'll post the closing trade. Thank you and have a lovely weekend. Goodbye.